So what is going on with TTCF stock at the moment? Is it time to panic? Is it a warning sign that the chef didn't meet Q2 expectations? Well, that is something we're going to talk about, but I'm also going to point out a fact that it does seem that several people have missed regarding this situation. Welcome to the PlantStock channel. If you're new to the channel, welcome. If you're not, then welcome back. As always, I would truly appreciate an early thumbs up since it does help spread the videos to more people out there. And if you are interested in companies like the Tattooed Chef, Beyond Meat, the Very Good Food Company, to name a few, make sure to subscribe because that's my whole focus here. Thank you folks, I truly appreciate your help. Now before we get to it, let's just take a quick look at the stock chart, ticker symbol TTCF. And as we can see, yesterday when the stock market closed, it ended at minus 16.25%. So it does definitely look like people are trying to get out of Dodge. Now, if we just take a quick look at the actual highlights of the conference call, we found out that the revenue was about $50.7 million. So this was lower than the two analysts actually expected, which was around $52 to $54 million. And I do know that a lot of us, I was hoping that we could see at the very least around $55 million. But this is the number we got at the moment. But it was still a 46% increase year over year. And when it came to the branded product, it was about 62.3% also year over year. So great numbers there anyhow. Yes, they are at a loss right now. When you look at EPS and margins, they don't look too attractive at the moment. But in my opinion, that is to be expected from a disruptive growth company, especially in the early stage. Look at Tesla, look at Amazon. When a company is in expansion mode, reinvesting their money into the company, into staff, facilities, and marketing, that's the kind of moves you want to see. So in this part of their journey, this doesn't bother me at all. Now, people seem really disappointed that the company missed the expectations with $2 to $4 million. However, I'm not sure that's the chef's own expectations though, because as far as I know, they usually don't talk about short-term perspectives when it comes to their revenue. Now, first of all, how can you be disappointed with almost 46% increase in revenue and an increase of 62% when it comes to their branded product? And let's not forget what they stated in the conference call. They expect to have reached 12,000 stores by the end of Q3, which is phenomenal. The original plan was 10,000 stores by the end of Q4, so they are expanding like crazy. Now, no one really seems to be talking about possible reasons for the current drop. Well, like I have stated several times, I think it's quite possible that from April to June, people have been taking their vaccines, and even earlier, they've started to go out eating at restaurants after being cooped up indoors for over a year. I also imagine that several people have been traveling more. Like last year, Rona cooled down way more when it started to get warmer, especially in the northern hemisphere. And let's face it, it does make more sense that when it is warmer, when people are socializing more, eating more out in restaurants, they would buy less frozen food. I mean, who brings with them frozen food when visiting friends, or even serves frozen food? And if you're barbecuing, frozen food would be off the table, right? And as far as I know, the chef still doesn't offer anything to barbecue. This will more than likely change with time, but we aren't there yet. Now, does that mean that their revenues might still be lower than what people expect for Q3? Because a lot of that time will still be during summertime, right? Which means that people might still be on vacation. I do believe there's a possibility for that. However, the last couple of months, we have seen that the D variant has started to rattle the fences, and we might see people being more cautious once again, not eating out or socializing as much. But as stated before, if we compare with Beyond Meat's recent Q2 earnings report, they had quite bad numbers when it came to the stores in the US. They decreased by 14%. However, when it came to their food service, meaning their restaurants, they got a staggering of almost 270% year over year. And even though they had great numbers in total this quarter, They have stated that they expect to have worse results in Q3 because they know that everything is more uncertain now, given the D variant. There is a lesson to learn from this if we compare it to the chef. To me, it certainly makes sense that people would socialize more now, being out more now, and that might change as the D variant gets worse. Now, if you want to make money in the stock market, try to have a long-term perspective, because when it comes to great companies like the chef, it's all about the long-term perspective. You want to look at the big picture. If you haven't read the book 100 Baggers by Christopher Meyer, here's a great part of the book. This is in chapter 2, Anybody Can Do This, True Stories. And this is about an investor and trader who's been doing this for basically 30 years. And as he states here, quote, "I have had my share of home runs and plenty of disasters. I have spent countless days glued to the computer screen monitoring positions and trades. Over a career of investing and speculating, the only real money that I held onto were in longer-term investments. So my discovery in investing and advice to younger ones would endeavor to is to study markets and invest in long-term enterprises which have the potential to vastly outpace other companies and industries, and stick with them as long as the theme is intact. Forget about trading and use the time you would have spent monitoring the trade with your family." So you gotta ask yourself, has the theme, the story of the company changed? Are they still expanding? Do they still have a great product? Do they have a vertically integrated business? Do people actually love their product? Are they still innovating? Do they have a strong management team? If you feel you have the answers to these questions, then you should probably know of what is happening to the stock right now, if that is a warning sign or if it is an opportunity. Now, if you do have an answer to that question, make sure you share it with me down in the comments. Well, that was it for today, folks. I truly hope you got a lot of value from today's video, and if you did, make sure to smash that like button and help me out. And don't forget to subscribe to the channel if you want to keep getting more information regarding this company and other plant-based companies out there. Thank you, folks. I truly appreciate your help. And as always, this was not financial advice. These were just my own thoughts and opinions. It's important to do your own due diligence and invest safe. Hope you have a wonderful Saturday. Hope to see you soon, and peace out.